have another one of those weeks where central bank policy announcements will have markets on tenterhooks. But neither the US Federal Reserve nor the Bank of England are expected to do anything this time around. Markets think the Fed will leave its headline Fed funds rate unchanged at 5.5% on Wednesday the 13th of December, and that the Bank of England will also stay in wait-and-see mode and leave the base rate at 5.25% on Thursday the 14th. As a result, we'll move swiftly on, other than to note that the Fed funds rate is now expected to be just 4.25% by next Christmas. That means markets are already pricing in 5 rate cuts for 2024 in America, with the first coming in March, according to the CME FedWatch service. For the Bank of England, the current expectation is that rates will also be down to 4.25% by this time next year. That means 4 cuts in 2024, and the first is seen coming in March or May at the latest, according to LSEG data stream. Meanwhile, the scheduled corporate announcements list for the coming week is fairly short. It features just 2 members of the FTSE 100 and comes with a smattering of full-year and half-year results, trading updates and annual general meetings. Names which may be worthy of further research include the following, pending any last-minute changes to the dates. Begbies Traynor on Monday the 11th of December, Chemring, S&U and RWS on the 12th, Decra Pharmaceuticals and Softcat will host their AGMs for shareholders on the 13th, Currys, Capita and S3 on the 14th, and house builder Bellway will host its AGM on Friday the 15th of December. But the company which might just cause the biggest fuss in the week ahead is support services specialist Bunzl. The company is due to release a 4th quarter trading update on Thursday the 14th of December, ahead of the release of its actual full-year results in late February. Now, the shares have made little progress over the past 12 months, but that does leave them within touching distance of this spring's all-time high. Now, Bunzl's business model is a pretty solid one. It supplies the things that other firms need in order to do business, but not items that they would necessarily sell to their customers. For example, Bunzl supplies disposable coffee cups to cafes, food wrap to supermarkets, bollards to construction companies, hard hats to builders, and so on. The required nature of the products means it may shelter the Bunzl from the vagaries of the economic cycle. Hospitals and supermarkets always need food wrap and rubber gloves, and at least to some degree, but it also will provide Bunzl with some pricing power, a key ingredient during inflationary times. And that pricing power helped Bunzl to upgrade its profit margin forecasts alongside August's first half results. However, sales growth has slowed a bit of late, as stockpiling during the pandemic has unwound, and high interest rates have weighed on perceived growth stocks such as Bunzl that have traditionally traded on premium valuations relative to the rest of the market. And even now, Bunzl trades on something like 20 times forward earnings when the UK market trades on 11 or 12. October's third quarter update revealed that sales between July and September had actually fallen by 8.8% year on year, by 4.8% on a constant currency basis and 4.7% using constant currencies and excluding acquisitions and disposals. Chief Executive Frank Van Zanten cited the ongoing slowdown in demand for COVID-19 related items, lower rates of inflation, a disposal, and the erosion of customer inventories as reasons for the drop in third quarter sales. Also note the base for comparison was tough. Stated sales rose 18.8% year on year in the equivalent period a year ago, and group revenues were 29% higher than the third quarter of 2019 before the pandemic broke out. Following on from all of that, Mr. Van Zanten shaved his guidance for total sales for the full year, whereby he switched to expecting, and I quote, slightly lower revenues in 2023 than in 2022. He started this year by forecasting that sales will be slightly higher, by the way. For the record, analysts expect 2023 total sales to be £11.9 billion, a fraction below 2022's £12 billion. After looking at the headline sales number, analysts will then examine the mix. At the first half stage, food service and retail sales were down 2% on an underlying basis. Grocery and the cleaning and hygiene businesses, well, they generated a 2% increase each. The first half also witnessed some interesting geographic trends. The UK and Ireland was the strongest region, particularly across food service and cleaning and hygiene. Europe was solid, and the US the weakest area. Post-pandemic destocking was the reason there, alongside a cooling in inflation. Analysts and investors will then benchmark this statement along the 2 other pieces of guidance that Mr. Van Zanten's offered for 2023. namely that adjusted operating profit will be, quote, moderately higher than in 2022 at constant exchange rates, and that the operating margin will be moderately higher than last year. At the moment, analysts are looking for an annual adjusted operating profit growth of 3% on a stated basis and an underlying margin of 7.7%. That would be the highest mark in the past decade, or joint highest mark at least, and 30 basis points or 0.3% above that of the previous year. Bunzl's expected to leave any comment on dividends until the full year results in February, but do watch out for an acquisition update. Bunzl's traditionally used bolt-on deals to supplement its organic growth and complement its business structure. The firm has spent £322 million on 12 acquisitions in 2022, and it's already struck 14 deals in 2023, the last two of which were in Ireland and Brazil. I hope that you and your families are all well and in good spirits. Thank you for watching, and I look forward to seeing you again next time.